We have another rate hike. The Fed raised the rates by 75 basis points, and your monthly mortgage payment just went up. So I wanted to make this video because, as we know, fear is the worst financial advisor. So I wanted to make this video to give you three options that you have, three things you should know when the mortgage interest rates go up and you're in the market to buy a house in Texas. So if that's something that you're interested in, keep on watching. Make sure you watch it all the way till the end, as I'll give you three different options that you have in this market right now. If we're meeting for the first time, my name is Peter Oreziak. I'm a senior loan officer and certified mortgage advisor with Cherry Creek Mortgage in the Woodlands in Texas. And in this video, I'll give you three things you need to know about when the rates are rising. If you're in the market to buy a house in Texas right now, and I'm talking about Texas specifically, not other states. As we know, the recession is imminent, and some states will see a decline in property values, not in Texas or other states like Florida and so on. So keep on watching till the end. I'll give you three things, three different options you have when the rates are rising. A 75 basis points bump in the rate increased your mortgage interest rate. So we went from the low fives to the low sixes. And if you're in a 200,000 price range, if you're buying a house for 200,000, your payment probably went up around $115. If you're purchasing a home in a 400,000 price range, your payment would have gone up by 230. And if you're purchasing a home in a 600,000 price range, your payment would have gone up around 340, 350, let's say $350 a month. Option number one in Texas would be to buy a house, find a house that has a lower tax rate. The tax rate is crazy and it ranges from 1.9 to 3.875 in the Houston area, in Texas, for example. So if you're purchasing a home in a 600,000 purchase in a price range and your payment just went up by $350, and let's say if we look at the different tax rates, you can go from a 2.8% tax rate and your monthly taxes of $1,400 down to 2.1, and that would bring your taxes down to $1,050 per month. So you can make up $350 just simply by finding a house in a lower tax rate. That's option number one. Option number two is to buy the house now, bite the bullet, buy the house now, and pay the extra money for the next 12 months. I say 12 months because we're expecting a recession. When the recession comes, the mortgage interest rates will drop. So if you buy a house right now in a 600,000 price range, pay $350 a month extra, let's say $350 times 12 for a year, you would be paying about $4,200 more. But with the recession and the rates, will come down when there's a recession, because they need to boost the economy, and they use the housing market to do so. So if I'm wrong, let's say it takes you 2 years to refinance. So if you take $350 times 24, that's $8,400. So that is a cost to keep that in mind, and I'll explain later in the video on how we need to look at it. But it is something you can do, is buy now. The market won't be as busy. You will have less buyers. You'll be in a better position as a buyer just by buying the house now. I know it stinks. The high rates are a little bit higher. We're used to the low threes and so on, but this is what the market is doing. And the bad news is that it's not done. It'll still keep going up. So if we're in the low sixes, if you buy down with 1 point, or mid sixes, if you don't pay any points, the rates will still go up. It's going to be in the sevens, maybe even in the eights. Only time will tell, but we definitely know there's a recession coming. And when that happens, shortly after, the rates will drop and you can refinance within a year or two. Option number three is to simply walk away. You don't have to buy the house right now if it's not the right time for you or your family. When you walk away, though, we need to look at the cost of waiting. So one thing that a lot of people don't really remember or talk about is the appreciation that especially homebuyers are not taking that into account. Last couple of years have been really crazy. We've seen appreciation 28, 30%, so year over year, 28.3, I believe. Let's say 30% appreciation. Now, will that continue going forward? Of course not. But this year, we're expecting to see it slow down, but we're still expecting to have about 10% appreciation in the next year. That means that if you're buying a house in a 600,000 price range and your house appreciates 10%, that means it's going to go up in value $60,000. So when we look at the cost of waiting, if you're going to pay the extra year, let's say of $350 more per month, you pay the extra $4,200 per month, but your home appreciates by 60 grand. That's a no-brainer, right? We have the appreciation we need to talk about. Let's say I'm wrong. Let's say it takes 2 years to refinance for the rates to come down. So let's say the extra cost is $8,400. You would be paying extra to keep the house for the next 2 years. And then let's say I'm wrong on the appreciation. Let's say it's not 10%. Let's say it comes down to what we normally see as 5%. 5% appreciation on a 600,000 house, that's still 30 grand. So if you pay 8,400 and then the home still appreciates 30 grand, you're still fine. And I'm talking about Texas specifically, right? Other states, Texas, New York, Texas is nowhere near what we might see in New York or California or other states where you have a massive exodus of people leaving the states, and they're all coming down to states like Florida and Texas. I think will still be very strong. Because it's good to know you always have options, right? So like I mentioned earlier in this video, fear is the worst financial advisor. So make sure you educate yourself, watch more videos, learn more about what's going on in the market, and make sure you're working with local pros. If you have any questions in Texas specifically, you can always reach me directly. I'll be happy to help. And if this video was helpful to you, make sure you smash that like button. Don't forget to subscribe, and I'll see you in the next video. Make sure you watch this video over here, and I'll see you soon. Thanks for watching.